Lots to speak about, whether the speed gathering that we've seen could continue well into calendar year 18, the economy pickup and the impact thereof as well. Let's talk about all of this with the Chief Financial Officer of Ashok Leyland, Gopal Mahadevan. He joins us right now on the show. Mr. Mahadevan, good having you. Thanks so much for taking the time out and speaking with us. I want to start off with a small subject that we had spoken about the last time when you were with us about a couple of months ago. At that point of time, the talk of the EWay Bill getting cleared was rife. Then it got a bit postponed. Now we finally have that clearance too. And if I'm not wrong, I remember you saying at that point of time that this could have an impact on commercial vehicle demand over a 12-month or an 18-month time frame as well. Would you revisit that point for us before we move on to the overall business?
Sure. I think, what I mentioned there, Neeraj, was that, anything that actually is helping streamlining the system is going to have a positive effect. So, we have had GST, and I think that's going to ease the movement of vehicles. And what actually GST did was to improve the productivity of vehicles, and which is what you're seeing now, off late, has been once the GST dust kind of settles down and people get comfortable with it, you've seen the demand going up, which is exactly what I had possibly mentioned about 2-3 months back. Not that I was a soothsayer, but it seemed like logic that if things get streamlined, you would see more productivity and therefore more investment coming into the sector. EWay Bill is, something that gets added on to the GST. It's not something new, really. EWay bills have been there earlier as well in select states, and I think for select commodities. What it actually does is to help monitor the movement of the vehicle, and if that happens again, I believe that it's good for the industry. It's going to help in faster turnaround time. It's going to kind of bring in a lot of processes into the fleet industry, which is good for everyone.
The overloading issue, which has been a long-spoken reason, and would the EWay Bill be able to check that, or the other measures be able to check that, and therefore does that result in more commercial vehicle demand? Anyways, we're looking at that scenario with the expected economic pickup as well. So how do you expect the demand shape to be like over the course of calendar year 18?
I believe so. I think, once you have a very transparent system like an EWay Bill coming in, I think overloading will naturally start getting checked. We have had, a rated load, rules coming in 2-3 states pretty visibly, like, for example, in Rajasthan and in UP, where you're actually seeing the demand really going up because, especially for sectors such as cement transportation, where overloading has been banned, owing to which you're seeing more trucks being bought and, more importantly, higher tonnage of vehicles that are being bought. So the move has actually happened from something mid-25 tonners to 31 tonners to 37 tonners to 41 now to 49. So this is auguring well for the industry. So I see a lot more positives on the EWay Bill than any downsides at all. A rated load is welcome. It's not only good. Good for the commercial vehicle industry, but not just because it's good for the commercial vehicle industry, but also because it actually brings in great safety practices. It improves the condition of roads because of the most impactful are the roads because of high overloading. So, the infrastructure gets better maintained, safety improves, both, other vehicle safety on the roads as well as for the driver safety for the particular vehicle. That, of course, will result in more demand, which is, again, good for the commercial vehicle industry. So we can't complain.
Yeah, and well, if I look at the November sales data too, pretty good. Though the LCV growth numbers for you at least, far outpaced the medium and heavy commercial vehicle growth numbers. Yes. If you can give us a brief there, and how is the month of December shaping up so far?
Well, December promises to be good, but we'll have to wait and watch because, typical of this industry, it's the last week where you have the final burst of energy to breast the tape. So we'll have to wait. It looks like December would be a reasonably good month, but there are sentimental reasons, where there is a certain amount of demand put off that happens between December 15th to January 15th. There are certain sentiments, and another reason where we could actually see a little bit of tempering, but which will catch up in January, is also the badging. As we call it, somebody may prefer to buy a 2018 vehicle than a 2017 badge vehicle, but that's only a month. So we are actually seeing quite some bit of demand on the ground, and that's positive. And if the economy continues to improve on the overall the overall scene in terms of GDP growth and investments into infrastructure, we could actually see a good Q4 as well.
I believe you've maintained that you will not compromise on profitability for the sake of market share. Tata Motors has been indicating a turnaround in domestic operations as well. For the industry at large, do you think pricing will not really be a factor that will determine sales? Would pricing be stable to marginally higher over the course of the next 3 to 6 to 9 odd months?
Well, all I can tell you is what we are doing and how the industry is performing. I mean, unfortunately, we're seeing that, some constituents believe that the best way to sell a product is to discount and sell it. And we believe that that's not the best way to do it. I think what we would want to do in Ashok Leyland is to have a complete solution for the customer. And when I mean it, I'm not kind of, using the term solution as a generic term, but in terms of total cost of ownership. I mean, it's the absolute vehicle cost, the cost of maintenance, the service cost, the AMC, the extended warranty, and the overall cost of experience and the uptime of the vehicle. I think ultimately what a customer would want in the medium term is to see that he's got a vehicle that's performing well in all parameters and also has a great uptime. So, for us to just discount and get a higher volume is not very, very complicated. Anybody can do it. But we would still want to pursue stating that we would need to have a fine balance between growing the market as well as maintaining our profitability. We are still the only company in commercial vehicle India where we have double-digit EBITDA margins. So we wouldn't want to forsake that purely for growing volumes. At the same time, let me tell you that we are not going to be shy from getting our share of the customer pie. So this is going to be a very fine balancing act that we are doing at the moment. Of course, we are keeping our operating costs well in check. Our working capital is one of the lowest in the industry. We don't push stock inside the dealer system. It's absolute cash and carry. So I think we are also kind of raising the bar in terms of industry practices, not only in technology, but also in terms of commercial practices.
And I would presume you're doing that because you would be comfortable with the kind of market share gains that you would have. For the medium and heavy commercial vehicles, Mr. Mahadevan, what would be your current market share? And would it be safe to assume that by end of March, you could nudge another 100 to 200 basis points in that market share frame?
Well, I would say that, instead of talking about purely market share, we are approximately about 1/3 of the market. And I think that has been a great growth that the team at Ashok Leyland has been able to post. If you were to look at it, we have possibly added about 8 to 10% over the last 5-6 years. But market share is just one parameter that you measure. There is a whole bunch of things that we're looking at. I mean, we're looking at, are we able to reach out to customers in the in the beyond? Are we able to get the uptime of the vehicles far superior to competition? Are we able to introduce products at the right slots? Are we actually getting cutting edge practices into the industry? Are we doing a lot of driver training institutes? So this is not purely about market share. I know that a lot of people in the investing community look at market share as an absolute benchmark. We will continue to pursue getting a larger share of the customer pie. That's obviously the intention. But we would also want to see how we are going about it. And finally, what matters is, are we, making it on a profitable way? That's equally important.
Certainly so. Let me wrap up this conversation by the third aspect of the business. We spoke about the EWay Bill. We spoke about how the demand is shaping up. What about opportunities that the government is throwing up? One, in terms of defense, and has it changed materially from the last time that we spoke, which was about a couple of months ago? And any other government business opportunities that you may be looking at very actively?
See, as far as the government business opportunities are concerned, we continue to be positive about the opportunities that the defense sector holds for us. We are one of the largest logistics provider for the armed forces, and we believe that with that we're bringing a lot onto the table. We have acquired capabilities in building vehicles for various applications, including multi-barrel rocket launchers. We have got mine-protected vehicles. We have got bulletproof vehicles. We have vehicles now which can carry missiles. So, these require a lot of capabilities, and we have built 6x6, 10x10s, moving on to 12x12s. So, I think we are doing what we need to do as a key partner to the Indian Defence Forces. That is to keep vehicles ready. once the tenders come in, I believe that we should be able to press the tape a lot faster than the rest.
Okay, wish you all the best, a great 2018, and thanks so much for taking the time out and speaking with us, Mr. Mahadevan.